welcome everybody to the November 2014 Life Insurance Update Show right here on The Biz. My name's Eric Palmer. Thanks for joining us. Now in November, we're celebrating Long-Term Care Awareness Month, and in honor of that, what I'm going to cover today are a couple of interesting facts. We're going to talk about a Safe Harbor Term Insurance Living Benefit product, and we're also going to talk about comparing some numbers, quoting that product against the major fully underwritten carriers that our clients are shopping each and every day. Now the first interesting fact that I want to take a look at here is going to be Medicare. Now it only pays for long-term care if you require skilled services or rehabilitative care, and usually it's a max of 100 days. And if we think about the different statistics that we've seen, we know that your clients are probably going to end up in a nursing home a lot longer than 100 days. But also an interesting fact about Medicare is that it does not cover the non-skilled assistance, and that's the stuff that involves those activities of daily living. So that's why we see the importance of accelerated benefits in the products that we're selling today, because our clients are thinking that they might rely on Medicare and it's just not going to be there for them when they need it the most. Another interesting fact was between ages 40 and 50, 8% of people have a disability that could require some form of long-term care coverage. Now the reason I pointed that fact out is because we typically think about long-term care coverage related to those individuals 65 years and older. But it's clear that there is a percentage chance that your clients in their 40s or 50s might experience an event that's going to require some form of coverage, and we got to be telling the story even as early as age 30. A couple other facts that stand out, of course, this is one we hear quite often. It's 70% of people turning 65 can expect to use some form of long-term care. That's a big number. 7 out of 10 people over the age of 65 are going to need the benefits that we sell each and every day related to the long-term care. Another fact that jumped out at me, women need long-term care more than men, an average of 3.7 years of long-term care versus the 2.2 for guys. So when we're talking to the family, focus in on those women and let them know that it's really important that they start planning with these benefits because they're going to need it more than us. And last but not least, we see that 20% of that population will likely need it longer than 5 years. So why is it important to not just sell one particular policy or limit your clients to a policy that only has a limited time benefit of 2 or 3 years? Make sure we're covering all bases. 20% is a high probability that we're going to need a coverage more than 5 years, and we want to make sure that our clients are totally covered for these potential events. Now I'm going to shift gears a little bit. What I want to do again is talk about this Safe Harbor term product. Now you've heard me the last couple of months to talk about this. I'm going to reiterate a couple of facts, but what I really want to hone in on today are the comparisons on the actual premium numbers, because I think you guys are going to be shocked at just how low the premiums really are on this type of a policy. So first, let's review this policy. Remember, Safe Harbor Term is a brand new product just launched. It's available through Brokers Alliance, and it's underwritten by Phoenix Life. But what's interesting is it has critical, chronic, and terminal illness, and the kicker is that we're going to advance up to 95% of the death benefit. So let me say that again. We will advance up to 95% of that death benefit in the event that your client qualifies for a critical, chronic, or terminal illness based on this policy. Now, what's really nice is there's no waiting period, and what that means is basically if our client has a critical illness event 4 months into purchasing the policy, they can take advantage of these benefits. Most policies that compete with this out there that are term with living benefits make you wait 2 years before you can take action. This one has a 0-day waiting period. Another interesting part is that that death benefit is actually reduced by the benefit amount that we're taking. So if I have a $500,000 policy, I take $400,000 in benefits, I'm still left with a $100,000 policy left in force for the remainder amount of my term, and that premium is going to be adjusted down, so I'm just paying for the death benefit that's left in force. That's a big part of what we're selling here, guys. It is life insurance, and we've got to make sure that we're adjusting that premium for the benefit of our clients. A couple of things that really stand out about this policy too is it's simple to underwrite. We've got simplified issue up to $400,000. We have abbreviated underwriting when you get up to the $1 million mark. And what I mean by abbreviated is it's simple height and weight. We do a mouth swab. There's no urine and there's no blood, and that's really important when we're looking at policies that can offer a death benefit as high as $1 million. So let's dig into some numbers here. I think this is really where the meat and potatoes are, and I want you to pay attention to these numbers closely because carrier number 1, as I've designated here, is what we typically see at the top of the stream when we're running the spreadsheets with the iPipeline tool on the Brokers Alliance website. So keep in mind what I'm talking about is comparing this term with living benefits from Safe Harbor to the absolute lowest cost term insurance that we see on our spreadsheets. So I took a male, age 35, standard non-tobacco, took a 20-year term, and we're going to start with a low band, just $100,000 of death benefit. Now, the number 1 carrier on the spreadsheet comes in at $14.96 a month. Now, keep in mind, there's no commission on that policy fee, okay? So you're just being commissioned on the non-policy amount of premium. And also, that's a fully underwritten product with no living benefits. If I take a look at Safe Harbor Term, that same individual, 35-year-old male, standard non-tobacco, it's $17.17 a month, only 7 cents a day different from that fully underwritten policy, but we're non-med and we have a commissionable policy fee. So that's a huge comparison. For 7 cents a day, you're going to change your client's policy and you're going to offer them living benefits. Let's take a look at a 40-year-old male. Again, standard non-tobacco, 20-year term. I went with the low band, so I kept it just under the $250. We're at $249,999 in coverage, 20-year term. Carrier number one, $38.72 a month. Safe harbor term, $46.13 a month. Again, just 25 cents a day to pick up those living benefits, keeping in mind that, again, fully underwritten on carrier number one, and we're still in that non-med category in the low band there with the safe harbor product. So now let's take a look at a male age 45. We're going to change things up a little bit. I'm going to go preferred non-tobacco, 20-year term, but we're going to go to $400,000 of death benefit. So carrier number one comes in at $40.95 a month, while safe harbor is just $52.13 a month. So let's think about that. 37 cents a day difference, and we're going to pick up term with living benefits with a $400,000 death benefit. Again, no commissionable policy fee with carrier number one. We're fully underwritten, no living benefits. With Safe Harbor, we've got the commissionable policy fee, and again, we have a non-med chassis here that we're working with $400,000 of death benefit. Now, last but not least, what we're going to look at is a 50-year-old male, and this is going to be an age near scenario. So we're actually going to be underwritten as a 51-year-old. I went with preferred non-tobacco on a 20-year term, and we're going to go for the full boat here. We're going to go with $1 million of death benefit. When I see carrier number one on the spreadsheet, it comes in at $204.45 a month. That's a $60 policy fee, and again, fully underwritten with no living benefits. When I take a look at Safe Harbor, we're coming in at $228 a month. That's only an 80 cents a day difference. Let me repeat that. 80 cents a day difference for $1 million policy, but with Safe Harbor, we have living benefits. We have critical, chronic, and terminal illness coverage built into that policy. They can accelerate up to 95% of that death benefit, and again, we have a commissionable policy fee. So when we're doing the shopping on term cases for our clients, ask yourself this question. Is it worth a quarter extra a day? Is it worth 37 cents a day? Is it worth even 80 cents more a day to show your client a policy that not just covers those death benefit needs, but also provides the critical, the chronic, and the terminal illness coverage? So if you have any questions about this policy, just go to www.safeharborterm.com. And of course, as always, if you have questions about what I've covered today, the statistics, the details on this product, just write me. It's info@thebiz.tv, or you can go right to our website, www.thebiz.tv. Appreciate you joining us this month. Make sure you celebrate long-term care awareness, and we look forward to seeing you next time.